On March 8, 2022, the London Metal Exchange did something it hadn't done in 35 years. It stopped trading nickel. Then it did something far more shocking. It canceled nearly $4 billion of completed trades. Deals that were done simply erased. Why? Because nickel had just risen 250% in 2 trading sessions, from $24,000 a ton to over $100,000, and one company's margin calls threatened to take down the whole metals market. Nickel is a quiet metal. 2/3 of it disappears into stainless steel, your cookware, your railings. Another slice goes into EV batteries where it decides how far the car drives. Boring, essential, until it wasn't. Meet the short seller, Tsingshan, the world's largest stainless steel producer, run by a legendary Chinese industrialist. Tsingshan had sold nickel futures worth an estimated $5 to $12 billion, a short position of 1 to 200,000 tons. Not a gamble on paper, a hedge. The company genuinely produces mountains of nickel. The futures locked in a price for it. Sensible, except for one fatal detail. The exchange's contract demands delivery of Class 1 nickel, 99.8% pure briquettes. Tsingshan's Indonesian plants produced something else, intermediate products, perfectly good nickel, but not deliverable nickel. So the hedge could only be closed one way, buying back the contracts at whatever price the market demanded. Then Russia invaded Ukraine. Russia supplies 5 to 7% of the world's nickel, and the market panicked about supply just as everyone realized the largest short position on the exchange was trapped. Monday, March 7th, 30,000 becomes 48,000. Tuesday morning, the price knifes through $100,000. A classic short squeeze. The forced buyer is the fuel. And then the exchange pulled the plug. Trading suspended. Every trade above $50,000. Canceled as if it never happened. Traders who had won legitimately were forced to hand back their gains. Hedge funds sued. The courts eventually backed the exchange's authority. But something irreplaceable broke that morning. A market's one sacred promise is that a completed trade is final. Break it once, and every trader remembers forever. 3 years on, LME nickel volumes never fully recovered, and Shanghai's contract rose in its shadow. The strangest part? Tsingshan survived. Banks extended emergency credit, the position was unwound quietly over months, and the company kept expanding. The exchange ended up more damaged than the firm that broke it. But underneath the drama sits the real story: Indonesia. In 2015, Indonesia mined 15% of the world's nickel. Today, roughly 65%. The playbook was ruthless and brilliant. Ban raw ore exports, forcing the world to build its processing plants on Indonesian soil. Tens of billions in investment poured in, and new acid leach technology turned Indonesia's cheap laterite ore into battery-grade metal. A masterclass in resource strategy. Don't sell the rock, sell the refinery. And one more twist, straight from the lithium playbook. The demand dream deflated. LFP batteries, iron-based, zero nickel, took over huge chunks of the EV market. Battery nickel demand came in vastly below the forecasts. Substitutes once again capped the dream. So what does March 2022 teach? 3 things. A hedge can kill you if you can't deliver what you actually produce. A benchmark that drifts away from the real market becomes a trap waiting to spring. And trust, the invisible collateral behind every exchange, takes decades to build and one canceled morning to spend. If this changed how you see a boring metal, there's more where that came from.